back to the Junius Maltby channel. We'll get into some news now. I covered the release and the first strikes of the channel coin earlier this morning. And while that was going on, while I was putting that together, I was taking a peek over at some news headlines and metals, the markets. And silver and gold were getting crushed. There was just a massive sell-off. Of course, there was discussion about the pending Fed rate hike, as that always rears its head. You know, we've covered this for years on the channel. Whenever the Fed thinks they're going to make a move and they play the little mind games that they do, things happen and shift around in the markets. Now they're doing another little dance, and they're talking about raising rates because the economy is doing so well. And gold took it more of a steady, I would say, cascade downward with its sell-off. But silver, well, it's as if it was floating in the sky and was shot down by something. There was definitely an outside force in order to create the charts that you see when you look at silver. I believe the total they hit it with, it looks like the price got crushed 85 cents today per ounce. Definitely well below the 18 mark now. Here we see 1766, but that was an earlier morning chart. And this is against a backdrop of headlines and news stories that we've covered for the last couple of weeks. You know, we've been taking a look at things, and it's not as rosy as things would appear. You know, we've seen the conversations regarding inflation. We've seen the uncertainty that's taking place over in Europe with the EU, the European Union, and couple that with international demand for precious metals. What's taking place there? I mean, that's on the rise. We're seeing India's appetite for silver increase, as well as gold, and as well as Russia, and just basically the world in general buying precious metals, and fear with the paper currency, the fiat money markets. So what has to happen? Well, they got to crush it a little bit. And they have their reasons. They play their games. And there's no way we could cover it, even in a series of videos, all of the different ins and outs of the ETFs and the paper metals market. I mention it on here, and I like to discuss it in brief at times as it appears in articles and opinion pieces by others. But it's shrouded in controversy. It really is, and secrecy. Sometimes it seems like you'll find pieces of information that are contradicted by other articles or other statements. But I think the one thing we can settle on, and one thing we do know, is that the paper markets are not the same thing as the metal in themselves, the physical metal markets. And by having leverage and short positions and all of the different things that are done by the major banks to supposedly invest or have positions in metals, it corrupts the market, and I think it artificially moves the price at velocities and speeds that wouldn't normally take place. It's definitely not something that is able to be participated in by your average person. When you see these giant collapses in price, and there's been ones, and you guys know what I'm talking about, you've seen them, that have been far worse than what we were looking at today. But I put it like, as I've discussed in the past when I talked about paper markets and having paper metal versus physical, they don't hold any of this metal. You know, a lot of these contracts, and I can't remember the exact number, but the other day I was actually watching another production by one of the big silver members here in the community, and I apologize, I do not remember which one. A lot of good information was there, and good slides put up, a lot of credited sources, and the amount of paper silver that's traded exceeds the amount of physical available at an incredible amount. Some say 250 to 1, some say 500 to 1. You know, basically 500 ounces of paper silver contracts are to every 1 ounce that actually exists. Now, I know they're not trading in 1 ounce coins or 1 ounce bullion. I believe COMEX bars are 1,000 ounces. I think it's 1,000 ounce units or something. Don't quote me on that. I don't can't remember exactly. Still getting over a cold, still a little foggy sometimes upstairs. I need to drink more tea. But the point of that is, one of these days they're going to lose control of the market. That's one of the themes we keep seeing discussed and predicted, and everyone's always waiting for it, and it just doesn't seem to ever happen. But one of these days they're going to lose grip with their ability to manipulate and shift the metal market. Especially, that's why, several years ago, Max Kaiser had that whole position where he was talking about buying silver to crash JP Morgan. Because the less physical silver we can give them access to, it's going to become more difficult for them to manipulate the market. That's why I kind of feel good about having a little stash of the Junius Maltby channel silver rounds coming my way. That's a multitude of ounces that done. It's physical form. I'm going to hold it. I'll have possession of it. They can't touch it or manipulate it or create contracts on it. But it doesn't seem to matter, does it? Because these people create contracts out of silver, out of thin air, that doesn't even exist. That's not even out of the ground. That might not ever be mined. You hear things like they have more contract or paper silver on the market than has ever existed physically. And you just wonder how that is. It's a form of absolute counterfeit, in my opinion. And it's a big casino game that one of these days has to catch up with the perpetrators that are actually engaging in this form of fraud, because it's basically what it is. If you called up and said, "Hey, I'd like to get my 3,000 or 4,000 ounces of silver I have on contract," you're not going to get it. They've sold that same contract to several other people. And, if you look at, you've seen what's happening today. So in one of the articles, it talked about Fed goons giving cover for bullion banks to drop $2 billion in paper silver. That's 23,000 contracts as soon as London closed. You look at this chart here, silver straight down. Again, that's an 85-cent drop per ounce in silver. Silver closed around 1760s today, I believe. I don't have the close price in front of me. Gold also down $17 to $1235.67. And again, a lot of the articles are saying, "Oh, this is because the pending Fed rate hike soon and bearish outside markets." Well, I'll tell you what I did today. In light of this, what they're calling a waterfall crash, trying to beat silver down, I just got up, pulled my big boy pants on, buckled my belt, and bought 10 more ounces of silver, 10 more Junius Maltby silver rounds. So there you go. That's how I stuck it to them as best as I could. All right, go stick it to the banks, stick it to the bullion paper market, stick it to these silver traders who think they're a bunch of tough guys, and go buy yourself some physical. Buy that physical silver, buy a Junius Maltby silver round or 2 or 5, and go put them in your stack, seal them up good, and don't let these guys anywhere near them. All right, thanks for tuning in. Keep your physical position strong, metallic, and cold.